All right, hey traders, Dr. Barry Burns with Top Dog Trading. Okay, wow. No, let's start that over again. Okay. See, you don't have to know how to speak well in order to trade. Nobody ever accused me of that. All right, let's talk a little bit about, again, the realistic stuff in trading. Big on that, as you know, and that's one of our themes that we always use. So we're just going to go through the afternoon session here. And this is from Friday. So what do we got here? Okay, well, what we got is on the short-term chart, we have a failed 3. And why is it a failed 3? It's a failed 3 because we break the high of wave 1. I'm looking at the 200-tick chart here. But we don't put a real body above the high of wave 1 over here. And it's actually a spike top reversal bar. And so it's a rejection of that value. It's kind of almost like, well, it is a stop run pattern. You know, and when I call it stop running patterns, I'm just saying that's the pattern. It doesn't necessarily mean that, you know, there's a lot of stops being run or whatever. It's hard to tell, but that's the pattern, and those patterns tend to work out pretty good for the various reasons. Stop running is one of them often. Now, the issues here are that, first of all, well, we want to wait till we get there, I guess. But, yeah. So we have, this is not a trend trade, obviously, on the 200-tick chart. Or on the 600-tick chart, for that matter. It's not a trend trade at all. So this is a momentum trade. It is the first cycle high after dad turns down. It's a wave 2 momentum trade. Pretty good. You know, okay, it doesn't quite get to 80, but it gets close. On the longer term chart, we've got KND up, which is not optimal, but mom is down, so that's good. Again, we've had the stop run pattern there. We've got a spike top reversal bar, so candlesticks are good. It's an okay trade. You know, I wouldn't say it's spectacular. I wouldn't say it's one of the fewer better trades. Now it works out great, but as far as probabilities go, I wouldn't give it fewer better because, again, on the long-term chart, KD are angling up, and it's a momentum trade for sure, but momentum trades, to me, have a higher probability when they're aligned with the trend in one way or another. In other words, if it's going to go against the trend, such as here, then I'd rather have it be longer in the trend, later in the trend, if you will. We have 5, 7, 9, 7 or 9 preferably. So, yeah, so you have a 4 out of 5 at best. But anyway, you know, it does work. Some of the lower probability, it still meets your setups. It's still a valid trade. But again, it's the first cycle high after dad turns down here, and a mom wave 2. Okay, so total momentum. Now here's your first cycle high after, actually, yeah, we can go here. First cycle high, or first retrace after the cross, we call it. Okay, let's analyze this one as far as probabilities go. You know, it works as far as making a we get to the bottom of the cycle, so we get to take off part of our position there to reduce our risk. But how do we analyze it? Well, okay, so first of all, we've got really good resistance overhead, 3 moving averages. We've got a great candlestick bar, or a pretty good candlestick bar, not great, but it barely meets the qualifications of a spike high bar. That real body is a little wider than I'd want it to be on the 200-tick chart, but and it closes at the high instead of the low. But by the time you're filled, you know, the next bars are red, so that kind of fixes that problem. You're extended in momentum on the downside. We've already had a 5-wave momentum down, so of course that's not great. But since momentum does lead price, we could definitely make a lower low as we do. Over on the long-term chart again, mom's angling down technically, but boy, that is, I mean, visually it's flat. So mathematically, yeah, it's red. It barely meets the qualifications. It might be down a pixel or two, but not strong at all, right? And then again, K and D are up. Now there it doesn't matter quite as much because they're just bouncing off the bottom. But still, they're not helping you. They're not helping you. So it does not add to the probability of the trade. You might be able to explain it away. But on the other hand, they're not on your side. So you can't say, well, that's on my side. So again, barely meets the criteria for taking the trade, but definitely not a fewer better trade. And then now what's interesting is here at this high, if you did take the trade and you kept your final protective stop above this high, you wouldn't have been stopped out. And it's pretty interesting. The high of that bar, let's see, I can actually bring this over here. And the high of that bar is 46.75, and the high of that bar is 46.75. So it goes right to it, right to the tick, and you wouldn't have been stopped out. So, well, that's good, I guess, if you took the trade. Now, before we get there, let's look at this one. Okay, so this would be a first retrace in the trend. We'd have to wait till there. We don't get filled there. We don't get filled. We don't get filled. We would get filled here. So basically, that would be your setup bar. Yes. Okay. So if you went for the first retrace in the trend here, again, it is a viable trade in the sense that, well, again, let's just analyze it. So do we have resistance overhead? Oh, yeah, we got the 15 EMA and we got the 100 MA there. That's the yellow line. Candlesticks, nah, nothing really good there. Stochastics, yeah, we got a mini divergence, so that's good. Momentum is flat on the short-term chart. Go over to the long-term chart, and momentum again. Momentum's down a little bit, and actually K and D are down. But this trade would be a loser. All right, so this was just pure loser. This was one that didn't work. I like to show these, and you were filled, and then you would have been stopped out on, I think, that bar. Anyway, you would have been stopped out. Sure, that would be a loser. That would be a loss. Okay, then we wait for here. Now, interestingly, wait a minute. Nope, not there. Let's find where the actual bar would be. Okay. Interestingly enough, this one is also the same trade setup as the last one, first retrace in the trend. Now, it's an ABC pattern. Okay. Actually, let me get my crosshairs off of here so I can show that. So here was one. Okay, but then we, instead of being able to go short here in a simple retrace, we went A, B, and then there's your C. And we take these trades. We don't expect momentum to stay below zero on them, and it doesn't. It actually goes up quite a bit. In fact, this one, I'd probably be a little hesitant to take this trade because it went up so far. Now, it has the structure of a rubber band trade a little bit, although, there's not enough room to get back to the 50 MA, obviously. You're still being held by the 200 MA, so, but we're also potentially into the pinball pattern. Anyway, the trade works out. You get big momentum going up, so the momentum shift definitely happened, but not enough. In other words, it happened so fast. Here's what happens. When you get momentum like this going up, it's happening fast. And so the 50 MA, which is slower and a lagging indicator, doesn't have time to turn around, and therefore that's what causes the rubber band structure. All right, and again, we get a mini divergence up here. Over here, now this is the interesting thing. We do get concurrent setups. We get well, lines are sticking. Okay, so same time we get a retrace of a first retrace in the trend here. And so concurrent setups, but again, not really the kind I like. As we've talked about before, how much time do I have here? Because I still got a lot of I want to cover. What we like, is we like patterns like this, and even if it goes flat like that and then goes down, that's great. In other words, big strength down, little strength up. This one, big strength down, big strength up. See, I don't really like that. Now, did it work? Oh yeah, it worked out great. But it's still not the type of pattern that's as high probability as the weaker retrace. Okay, so let's go back, because again, there's a couple things here I really want to cover and maybe spend a little more time here than I planned on. Okay, so now here's our second retrace in the trend. And this one, a little more classic. We hold at the 15 EMA instead of getting above that. That's great. We reach 80 easily on %K. It's also, by the way, a first retrace after dad turns down, so it's a concurrent setup. Mom holds below 0 for a short, so that's good. Over on the long-term chart, mom's angling down at a pretty good angle. It's not just flat and down by a pixel or two. It's actually visibly down, so that's good. K and D are up, but again, they're at the bottom of the range, so they're meaningless. They don't help, but they're just basically useless at that point. Okay, so that's a pretty good setup. That's a little more classic textbook type setup. Now here's an interesting thing we run into. What is this? Again, let me take the crosshairs off here so I can use my drawing tool. So here what we got is a low, and then a higher low, and then we go back and we get a lower low again. In fact, these two lows are equal. So it's kind of a weird, it's not a head and shoulders, because the head and shoulders, the head would be lower than the shoulders, right? So I don't know what you call that pattern, but it's, I just wanted to point it out because, again, this is the real kind of stuff. You're expecting a head and shoulders, and you get this, and a lot of people would think, oh, great, higher low, I'll take that. Well, you could, and if you did, there's no real setup for us here for top dog trading, but it's not too bad. A first higher low after 5 waves down. If you had other things and got a second chance pattern down there and so forth. If you did, okay, you got your first half off, and then you took a loss in the second half, so about a break-even trade. And then you get another opportunity here, if you wanted it again. Mini divergence. Now what I do like on this, at least you got concurrent cycle lows, so that part's good, but it's not our typical reversal trade. Now where's your first retrace after the cross, after the price goes above the 50 MA? Well, there's technically not one. What we do have is a first retrace in the trend, which in this case is also the first retrace after the cross. Now if you took this trade, get our things aligned here. It's not too bad. You've got a nice engulfing candlestick pattern. Price retraces to the 15 EMA, holds there. Mom on the longer term chart's angling up nicely. Ended up putting in an ABC pattern and didn't go all the way up yet, but you didn't get stopped out yet either. And then you get your second opportunity here, and this one's really good. In fact, I took both of these trades actually, as I recall, on Friday. And here's what I love about this, okay? It's an ABC pattern, but it's a, well, first let's look at the indicators while I got the lines up there. So we got KD and Mom angling up on the short term, KD Mom angling up on the long term. And look at the good angle on Mom on the longer term chart, okay? Believe me, that stuff helps. This is what we look for on fewer, better trades. Look for all these kind of things. We're above all 4 moving averages. Okay, we're holding above all 4 moving averages. That's great. On the longer term chart, we're above the 50 MA. That's okay. But anyway, the other thing too then that I wanted to point out is, get my drawing tool back up here real quick because I'm running out of time. There we go. It's an ABC, oops, that's the wrong drawing tool. Okay, it's an ABC pattern, but it's a triangle. So that's why you don't get stopped out if you entered here, because we never break that low, right? So we make a lower high but a higher low triangle, so it's also an ex-con type trade. So for that, it's fantastic. So it's a concurrent setup type of trade. So that's what I love about that. All right, so then we get close to the end of the day. There's your second retrace in the trend. That's still pretty good. K didn't get down to 20, but so whether you took it or not, or just stayed in, really what you'd want to do is, I took that one and that one, and then you just want to stay in until the end. And it made a nice 7-wave pattern. And then it's the end of the day. That's right before the close, the New York close, not the Chicago close. And you've got a, triple cross there. You've got cross of, really, you've got an indicator trailing stop there as well, based on the long-term chart. So there you go. Real life stuff, the good, the bad, the winners, the losers, the stuff where it looks kind of indecisive, and what I look for that makes the difference between trades that barely meet the qualifications, which sometimes actually still work out pretty darn well, and then those that are the fewer better trades where everything just lines up beautifully.